Hey everyone, welcome back. If you're just tuning in, I'm so glad you clicked on this video because what I'm about to share could literally save you thousands of dollars this year. And honestly, that's not an exaggeration. We're in 2026 now, and I'm seeing more people fall into the same investing trap than ever before. It's like watching people walk into the same hole over and over again, and nobody's bothering to warn them. Well, I'm warning you today. So here's the thing that's been on my mind lately. The market is doing something really confusing right now. It's up, it's down, there's uncertainty everywhere, and people are genuinely scared. But you know what happens when people get scared? They start looking for quick fixes. They start looking for ways to make their money back fast or to catch up on gains they think they've missed. And that's where the trap is waiting for them. The biggest trap of 2026 is what I call the performance chasing frenzy. Let me explain what that actually means because it sounds fancy, but it's really just a fancy way of saying people are buying investments purely based on what did well last year. It happens every single year, but this year it's on steroids. Everyone's talking about AI stocks, everyone's talking about certain sectors that just had killer years, and everyone's convinced that if they don't jump in right now, they're going to miss out forever. Sound familiar? Yeah, it should, because this is how people have lost money in pretty much every market cycle in history. What's happening is people are essentially trying to catch a falling knife by buying at the top. They see an investment that's already had a massive run up in price, and they think they've discovered some secret that everyone else missed. But here's the reality check. By the time most regular people hear about something and feel confident enough to invest in it, the smart money has already moved on. The gains have already happened. You're literally just buying high and hoping it goes higher, which sounds good until it doesn't. I've watched this happen so many times, and the pattern is always the same. Someone's buddy at work tells them about a stock that's been crushing it, or they see some viral post about a particular investment trend, and suddenly they feel this urgency to act immediately. They throw money at it thinking they're being smart and getting ahead of the game. Then, a few months later, when the music stops and the investment pulls back, they're sitting there holding a bag of losses, wondering what happened. This is where the trap really springs. The insidious part about this trap is that it feels logical while you're doing it. You can actually convince yourself that you've done your research. You look up a few articles, you see impressive performance numbers, and boom, you think you've found your golden ticket. But performance numbers, especially recent ones, are absolutely useless for predicting future returns. In fact, there's actually a pretty strong argument that chasing recent performance is one of the worst strategies you can use. Think about it this way. When something has already done really well, the risk-to-reward ratio is no longer in your favor. The potential upside might be much smaller compared to the potential downside because a lot of the good stuff has already been priced in. Most people don't think about it that way, though. They just see big gains and want in. They see their friend making money and feel that fear of missing out creeping in. And that's when they make the mistake. What really gets me is that this trap catches educated people all the time. It's not about being smart or dumb. It's about being human. Our brains are wired to look for patterns, and when we see something that's been working, we assume it will keep working. We also hate being left behind. If someone else is making money in something and we're not, it feels wrong, even if the logical thing to do would be to wait. The really sad part is that there's an alternative approach that actually works, but it requires something that's not exciting, patience and discipline. The real money in investing doesn't come from chasing whatever's hot this week. It comes from having a plan, sticking to it regardless of what's happening around you, and buying things when they're undervalued, not when they're flying high. But that doesn't feel good in the moment, does it? It feels boring. It feels like you're missing out. So here's what you need to do to avoid this trap entirely. First, stop looking at performance rankings. Just stop. They're not helping you. They're hurting you. Second, ignore the noise. Your friend, your coworker, that guy on social media with a fancy Tesla who claims he's made millions in crypto or penny stocks or whatever, ignore all of it. Third, make a plan based on your actual goals and your timeline, and then stick to that plan through thick and thin. If your plan says you should be investing in diversified index funds, then that's what you do, even when everyone's talking about some hot sector that's up 300%. The world's best investors, the ones who have made generational wealth, aren't the ones chasing hot trends. They're the ones who look at what's undervalued, what's misunderstood, and what fits their criteria, and they accumulate those positions over time. They buy when people are selling in panic, and they hold when people are desperate to jump in. That's boring, it's unglamorous, but it works. Remember, 2026 is going to throw a lot of temptations your way. There will be something that's doing amazing, and you'll feel that pull to join in. But before you make that move, just pause for a second and think about whether you're making an investing decision or whether you're falling into a trap. The difference between the two could quite literally be tens of thousands of dollars in your future wealth. That's not something to take lightly. Thanks for watching, and I'll see you in the next one.